All right, let's talk COLA. The very first projections for Social Security's 2026 cost of living adjustment are out, and we're going to break down exactly what these new numbers mean for you.
So let's get right to it. The number one question on everybody's mind, right? How big is that increase going to be?
And the number is 2.8%. That's the latest projected increase for the 2026 cost of living adjustment.
Okay, but what does that actually mean in dollars and cents? Well, for the average retired worker, you're looking at about an extra $56 a month, which works out to around $672 for the whole year. But hold on, because here's the catch. The reality check, really? That full amount? Yeah, it might not actually show up in your bank account. And here's why. It's kind of this classic give and take. You get that $56 boost from the COLA, but then Medicare takes its bite. The forecast shows about a $21.50 increase for Part B premiums, and that comes right out of your Social Security check. And a lot of people are feeling this exact squeeze. A recent AARP survey found that a whopping 77% of folks over 50 feel like an increase this small just doesn't cut it when it comes to keeping up with rising prices. This chart really puts it all into perspective, doesn't it? I mean, sure, 2.8% is a little better than last year, but it's a drop in the bucket compared to that massive 8.7% jump we saw back in 2023 when inflation was just through the roof. Okay, so moving on from the COLA number itself, there are two other really important rule changes that are already happening that you've got to know about. First up, paper checks are officially a thing of the past. It's all digital now. And second, and you really got to pay attention here, if you're ever accidentally overpaid, the SSA can now claw back up to 50% of your monthly benefit to recover it. That is a huge jump from the old 10% limit. All right, but it's not all doom and gloom. There's actually a new change that could put a little money back in your pocket when you file your taxes. It's a brand new senior tax deduction. So if you're 65 or older, this lets you subtract up to $6,000 or a full $12,000 for married couples right off your taxable income. And the great thing is, this stacks right on top of any other deductions you're already taking. But, and this is super important, you have to remember this is only temporary. It's set to expire after the 2028 tax year unless Congress decides to step in and renew it. And finally, let's not forget, these adjustments aren't just for retirees. If you're still working and paying into the system, there are some key updates for you too. So look at these numbers. For higher earners, the maximum amount of your income that's even subject to Social Security tax is going up to $184,500. And if you happen to be collecting benefits while you're still working, that earnings limit has been bumped up as well to $24,480. So what does this all mean when you put it all together? You've got this modest COLA, you've got the rising Medicare costs, and all these new rules. It really leaves us with one big question for you. How are you going to adjust your personal budget to handle all these changes in 2026?